Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Somany Limited. Will it perform or not? And this is the different Somany stock that I'm talking about, not the Somany Home Innovation Limited, but the Somany stock that is into building materials and into tiles, etc. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Somany Limited, here's small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you pay $100 upfront, then you get a 1 year membership with a 25% discount. Also, for those members for whom Patreon is not working, kindly check the notification on the YouTube, in which I have put up a post. So kindly go through the link, and probably it will help you get access to the Patreon thing. For detailed market or company talk, you can directly contact me on email, and we can work things out with a fee. Now about the company. Established in 1968, it's one of the leading tiles manufacturer in India, Somany. Their products include tiles for walls, floor, bathrooms, kitchen, and rooms. Also into bath fittings. The market cap of the company is around 2000 crores at the moment. It has increased slightly from the time I have made the presentation, so kindly take that into consideration, because it might not be exactly the same as the price today. I made the presentation about a week back. It has nationwide presence, and it has a number of outlets, and it is a renowned brand across India. If you look at the financials, then the sales improved by around 15% in the December quarter, and profit improved by around 280%. So profit jumped by around 280% to 28 crores from 10 crores, and that has been the effect of the base, you can say, for the September to December quarter in FY20, when the complete shutdown of the Indian industry was about to be lifted. Things were moving very slowly. The return on equity and margins are low, and that is a cause for concern, although this will improve as things improve going forward, but at the moment it is extremely low. So, what is ailing the stock or the industry altogether? The business in complete downturn for the moment. So, things are improving on the ground. I'm not saying that things are not improving, but over the last 3 4 years, things have been down. Even before the pandemic, things were not that great, and so numbers were not coming in. So, most of the businesses which are more capital intensive, which are more related to housing, etc., and building materials, did not do that well, and this was a cause for concern. High raw material cost is also a reason, and we are seeing how oil prices are escalating, so this will have a detrimental effect going forward on the numbers. Construction activity declined over the last 3 years from FY18 to FY 2021. Now things are picking up, and what we are seeing is probably the base effect will play out in the next couple of years, and that's why stock prices are moving up now from those abysmal levels of 2020 February, although on the ground things may just slightly improve. So lockdown, the complete lockdown nationwide has had a very devastating impact on the industry. Now we are having localized lockdown, so that may not have that effect, and that's why I'm saying June numbers would be which would be remarkably better than what it is like last year. But the stock has run up a lot from those, you can say, low levels, so you need to understand that. So it had lofty valuations in 2017, and now it is again, the stock has risen a lot, so the valuations are still stretched at the moment. And mid cap sell off between 2018 to 2020 has also not helped, and what we have seen is that over that 2 years period the valuations became cheaper, and the bottom was made in 2020. But what currently is happening is that the stock prices has gone up, although the industry and on the ground things are in reality has not moved up that much. So we will see how things pan out once the base effect eases out in the next 2 quarters. Then I think numbers could be on the downturn. So what needs to be done? In my opinion, avoid for the moment. I think the run up on the stock has been a lot. I think wait for major declines in the market. If the market declines 8-10%, the Nifty and Sensex and the mid cap index or small cap index decline by around 10-15%, then you can look at these stocks. These stocks will be down 20% from these levels. Then probably these stocks can be looked at. Otherwise, it's an avoid. Management is strong, it is doing well. There has been demerger due to which the company is set to do better. But I think there you can say consumer division will do even better. So the next 2 quarters for the building material would be difficult, but look at pure consumption plays. That would end up doing much better than these building material space. And so wait for sharp moves to exit probably if there is a strong up move in the stock. So this is my video on Somany ceramics. So please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.